Welcome to another video. My name is Tom Nash, former senior financial analyst, now 100% full YouTuber, talking to you about financial education and specifically the stock market. And today I have a straight up banger for you. Not every day you see an opportunity like this. We have a company that's valued at $180 million, billion, not million. They have 80% gross profit margin, 40% EBITDA margin, and somehow the market is undervaluing the company by more than 20%. If I've ever seen a good investment, that's one. Now, of course, I'm talking about Oracle, ORCL. You know the bottom line in my videos always comes first. Now, Oracle is one of those misunderstood players that just the new wave of investors currently in the market just doesn't get it. And let me explain why. Oracle will fly through every single test I'm going to put it through today. As you know, I have 5 tests. I put companies through the ringer. I'm going to test their business model. I'm going to test their financials and the DCF to see the actual valuation. I'm going to test their management. I'm going to test their moral values. And of course, what other smart people are saying about this company. So I'm going to put them through the ringer and you'll see that the company is undervalued. You always know that I don't hide this stuff. You don't have to wait until the end of the video to actually find out what the conclusion is. However, I do appreciate it if you stay just because you actually might get something out of it. I don't want you blindly investing in companies without understanding what actually is going on, because long term, it might benefit you actually to understand more. Now, let's get started. As always, the 5 categories are, if you're new here, is business model, management, what other smart people are saying about this, moral values, and the financial side, which means the financial reports and the DCF valuation, which are actually going to put out a DCF value for us as far as a target price for this. Now, I'm going to already let you know that the target price for this company is about $75, meaning that the fact that it's trading right now at $62 is a huge opportunity. In fact, in the last 5 days, this share somehow lost 2.5%. I have no idea why. Well, I have a few ideas and let me share them with you. So first of all, of course, you have the whole element of them not being cool enough. So the company was founded in 1977, which is a long time ago. So it doesn't make it cool and new and shiny like some of these new players. And in fact, the guy who founded it, Larry Ellison, is still the chief executive chairman of the board and still pretty much runs the company. His title officially is CTO and chief executive chairman of the board, but he's pretty much in charge over everything. And his CEOs pretty much run like operational CEOs. He's the guy who's in charge. Now, he doesn't have to stay there. He has a few money, but he's there, which makes it very credible for me to invest in a company like this. Now, that's about the management. Now, let's talk about the business model a little bit, where I think most of this is coming from as far as misunderstanding, undervaluing the company. People are looking at Oracle as this business who's supposed to compete with these cloud infrastructure businesses like AWS. And they see Oracle ranked number 5 in that. And basically, well, they're not as good as their competitors. They're only ranked number 5. Well, that is true. But what if I told you that they're not even trying to compete in that? They don't care. They rank number 5 in cloud infrastructure just for the sheer dominance that they present in enterprise, in actually software for businesses, which they dominate without any competition. They're number 1 in enterprise for businesses, and they're so strong in that market that by sheer dominance there, they grab the number 5 spot for the cloud infrastructure. They're not even trying. Now, the reason they're not so fast to move to this new shiny cloud stuff is because they're presenting a lot of massive revenue on the enterprise side. I just mentioned this earlier. 80% gross profit, 40% EBITDA margin. These are insane numbers. Why would you want to give it up? Now, eventually, of course, this business will have to die down. All of this enterprise software for businesses based on the old model is going to move to the cloud. Oracle knows that, but it's not going to happen tomorrow. It's not going to happen next year. This is going to take a lot of time. Now, what does Oracle actually has that a lot of these other companies don't have is they have decades of data, massive databases, and client loyalty. They're in bed with some of the biggest clients in the market. When they decide to move to the cloud infrastructure business, they're going to have a massive pull. They're going to be a major competitor. Think about it this way. They're number 5 right now without even trying. What happens when they actually try? Now, let me give you another little gem. The NetSuite and the Fusion ERP are growing at 30% per year. That is without even trying. Imagine what will happen when Oracle puts this into priority. But the reason they're not putting this into priority, they want to do it on their own terms. They want to do it when they damn well make sure that they keep their dominance as number one in the business enterprise side. Only then you're going to see the movement into the cloud infrastructure. That's not going to happen overnight, and it's only going to happen cautiously. They don't want to give up this position they have right now. Now, eventually, when Oracle actually moves into this cloud infrastructure business, they're going to do it with a bang, and you see it. But the margins there show me something really interesting. This company is generating better margins with the enterprise business, which is much more expensive to maintain and much more expensive as far as cost of goods than these other companies who are doing cloud computing and cloud infrastructure, where you have, by definition, larger margins. So when Oracle, with its efficiencies, its database, its client relationships, its resources, are going to move into this industry, be careful, dudes. I mean, it's going to be a bloodbath. Now, of course, not literally, figuratively speaking. Now, here's the thing about Oracle that you need to understand. Oracle is growing slowly. Now, what I did in today's video, I basically took a DCF and I assumed a very steady conservative growth. Now, as you can see right here, this is an extremely conservative model. What I did here, I assumed a 5% annual growth on the EBITDA all the way to 2026, and then 4% long-term growth. Now, this model with this target price completely ignores any breakouts into the cloud space, which will probably happen. So you need to understand that this target price is extremely conservative. Of course, here we have the tax numbers, the capex numbers, and for this company, I used a 10% instead of 12%. Why? Well, given how low the interest is and given how risk-free this company has been since 1977, I see 10% as the tipping point of the balance of giving this company enough cred, but not going over on this, not going YOLO. So 10% for this company is suitable. And by the way, this DCF model, which you're seeing on the screen right now, will be available to download once this video gets posted to channel members and Patreons. And now let's get to the part you all want to see, the target pricing. So based on the perpetual approach, we have almost $82. Based on the EBITDA approach, we have $67.50, giving us a nice little average of $75, give or take. Now that's a 21% increase versus today's price, meaning this blue chip company, 182 billion company, that's generating 80% gross profit, 40% EBITDA, killing it, number one in business enterprise software, number 5 in cloud computing globally, haven't even moved into that, is 21% underpriced because people think it's an old, boring company and because it's not innovative enough for the cloud. Now, this is the classic story of people looking at these new shiny toys and they ignore the baseball cards in the basement that are worth millions. Don't be that guy or that girl. Make sure you understand what this company really is because it is a gem. So first of all, let's look at their balance sheet. Right now, I can see that they have almost 30 billion in cash, which is massive, 110 billion in assets, but, and there's an important but here, not that kind of but, goodwill has about 43 billion, 44 billion. Now, goodwill, if you watch my previous video, is what you get when you acquire a company and you can't allocate the purchase price to something tangible or intangible. Basically, you're buying goodwill. Now, this number is meaningless. You can't deduct it, you can't amortize it, you can't do nothing with it. So realistically, they have about 70 billion in assets. Now, when you look at this number, so you might say, well, they have 80 billion in liabilities, right? That's a lot. Well, take a look at this number. They have 63 billion in debt, another 7 billion in debt right here, meaning it's a $70 billion debt, meaning it is equivalent of their assets minus the goodwill, meaning they're not extremely overbalanced, but they're balanced. So what you have here is a completely break-even situation. If you eliminate the goodwill from the assets and you just take a look at the debt from the liabilities, you have here 70 to 70, which is not spectacular, but it's really good as far as keeping conservative. I like it. And now this is the part I want you to see. Look at this. Total revenues in the 3 months leading to November, almost 10 billion. Now, if you eliminate these, you get 80% gross profit, which is insane. But if you eliminate everything else, you still have operating income of 3.58, meaning almost 40%. That is insane. Imagine what happens when they move to cloud infrastructure. That business has better margins. So somehow this is supposed to be better than 80% and 40%. That is mind-blowing. And now let's take a look at what other smart people are saying about this company. I want you to meet Alex. Alex Zukin from RBC Capital is ranked number 8 out of 7,234 analysts on TipRanks, 79% success rate, 33% annual average return, and he's saying that Oracle is 15% undervalued. He's giving it as $71, which is lower than my $75, but we agree that they're undervalued. Whether you believe Alex that is 15% or you believe me that is 21%, in both cases, both me and Alex think that this company is heavily undervalued, especially given how massive it is. It's a blue chip company with a 15 to 21% upside. That is insane. And what about the management of this company? Well, the company was founded in 1977. Believe it or not, the guy who founded it still pretty much runs the company. Larry Ellison, the guy who founded this company, still serves as the chairman executive of the board. However, he's also the CTO of the company. But in fact, everybody knows that Larry Ellison is the guy who's calling the shots. He used to have two CEOs, now he has one. One actually passed away tragically. But at the end of the day, his CEOs serve a more operational role, while Larry Ellison calls the shots. And this is a guy who's worth $90 billion. He has no business still managing this company, and yet he does because he loves it. It's his passion. I love that. That is what makes me want to invest in this type of company. So basically, what you just saw here is a company that passed every single one of our tests with flying colors. It might be old, it might not be as sexy and shiny as these new companies, but it's a giant with great margins, great fundamentals, and a great future. Just based on this DCF which I showed you, which completely ignores them moving into cloud services, they're going to be massive. This is a company that is undervalued based on the most conservative models. Think about what it's going to be worth when they actually become a major player in the cloud infrastructure. And again, this has been my opinion, and as such, might be inaccurate, might be wrong, might be the ramblings of a madman, who knows? Do your own research, find out for yourself, allegedly, blah blah, mother effing blah. And before I sign off, a huge thank you for the channel members and the patrons. You guys have been killing it. We're almost at 900 patrons and 300 channel members. That is insane. Thank you so much. I appreciate it so much. We'll see you guys in the next video.